Hey, it's Rick. It's Saturday, November the 11th. Good Remembrance Day to everybody, and a happy birthday to my granddaughter who turns 13 today. I'm going to take a look at the market, see what happened this week, and then I want to spend a little bit of time on how I approach, I won't call it my selling rules, but I'll show you a couple of examples of sales, purchase and sales that I made, and what my logic is behind that, because it's a thing that we all struggle with is when to sell. So first, the market. I have the weekly chart up here of the major indexes. First one, and I've ranked these or sorted these from biggest gain in the week. And heading the list was Bitcoin, up 8.1%, basically. I just don't find a way to get into this, and it's not too much appeal to me. And the fact that it trades 24/7, and I don't have access to a Bitcoin account, so anyway, it's on my screens for interest. The next biggest winner for the week was the QQQs, and I've drawn this in the past. We have this cup and handle, and now we've broken this week out of this handle. So this is a very bullish sign. It's time. Well, you look at this one, and you look at the SPY, which was also up almost 1.5% for the week. Basically the same story. It's come out of this downtrend here, and is bullish now above the 10-week moving average and the 40-week moving average. So this is really a signal to get for index investors, long-term investors, to get fully invested. I'm still, we'll get to it in a second, the RSP and the mid caps and the small caps look a lot uglier in this. So that gives me some pause, but nevertheless, this is a clear bullish signal. If we're to enter Monday, let's say above today's spot, and the stop is down here, it's about 7.5%. So, I mean, that falls within the parameters. I just think we're going to get a better, lower risk entry sometime over the next 2 or 3 weeks, but I could be completely wrong. So maybe the very best, put a toe in the water. The dollar had a strong week, which is technically not good for the markets. But it is sort of mushing around here, looking for some direction. Dow Jones basically up a little bit, but you can see it's just been treading water now for a better part of a couple of years. The equal weight QQQ still it's now got above its 10-week and 40-week moving average. So again, that leaves some credence to the fact that we potentially are heading into a new bull market here. Bonds down slightly for the week, still not looking really good. Just it's going to be a function of where interest rates are going. And the one that I follow most closely is the equal weight S&P 500. And again, we're just trending or chopping sideways. And we'll take a closer look on this in the daily chart to see what I consider the market conditions. The mid caps, basically the same story, and small caps weaker still. Although we can't seem to hold these lows here, seem to be holding. So far so good, but we got a long ways to go to get back up beyond the 40-week moving average. Gold was off 3% this week. I don't have a lot of interest in gold. And oil had a big down week. That's now 3 down weeks in a row. So that's actually good for the economy. Lower oil prices good for inflation, but not good if you're in Calgary. So that's the bigger picture. Not much change. Just changes to a daily. Zero in a bit. change my time frame to daily. Okay, and look at the RSP, the equal weight. So this is the model that I basically make my how heavily invested am I going to be, and we're still put these moving averages back on. We're still in a yellow zone. We're above the 10-day moving average, although it's turned flat. That's 21. This is a 21-day. 21-day moving average is turned flat. I'd like this to be going up. We're still below the 50-day moving average, and we're above the 10-day moving average. So this is still yellow conditions, but this is looking more promising. It was a good day Friday. If we can hold here and then later in the week curl up through the 50-day moving average, and this will cause this moving average to start to turn up, we could be into green conditions. So that would be a welcome relief, because we haven't had green conditions since way back in June. So looking forward to that. Meantime, though, just cautiously optimistic. A couple of new positions that I did take this week, I'll just have a quick look at. First is Daktronics, I think they're called. Yeah, Daktronics. You can see here, let's just move. This is the closing price of the RSP on a daily basis. And of course, this is the chart of the stock. So you can see with this whole time that the RSP was coming down, this stock has been really holding its own. So you have to think, the expectation is if the market starts to rip higher, this one's going to just rip a lot higher faster. It's like a basketball being held underwater. The market pressures are keeping this from going up. And once that pressure gets off, then this could lift off. So I bought a starting position on November the 6th on here, and then added to the position over here. Raised my original stop was down here at 9.15, and now I've raised my stop up to basically break even, 9.74. We had a really good day today. I've got 2 to 1. Just flick over to a 30-minute chart for a second, and shows us a bit better. I have not sold any of this, and it should be logical from the chart as to why. So my first buy was here, here actually. The second add was 9.85. Yeah, it must have been right here. And I've held on to this. I didn't sell anything today. So, but now I've raised my stop to my break even, which is my break even cost is at 9.74. So this is a no lose trade. So I'm just content to hold on to it. Let's go back to the daily. Second one I bought this week was FTI. I just pull this up here. They're in the oil field services business. This is to me just a classic. I bought this yesterday. No, well, it'll be Thursday. This is to me is a classic. You got a stock in an uptrend. It comes down to touch the 50-day moving average, and this is where the point where institutions generally will add to their positions. They're buying and buying. They'll back off, and then when it gets down to the 50-day moving average, they step back in again. So you can see that's happened a few times here in the last little while. It actually got below the 50-day here, touched it here, and then rocketed forward, although this was an earnings day. So I felt this was a really low risk entry. Let me just go to a 30-minute chart. Spread this out a bit. And I did sell some of this, and I'll try to explain why. So here was my, I entered this, what day? Thursday. at 20, when it crossed above this point right here. I draw a line here. That was sort of my signal. If it gets above that, so my entry was right here. It went up a bit, came back down, mushed around, and then at the end of the day, I'm very modestly underwater. I was in at 20.98 and basically was at the same spot. So yesterday morning, Friday, it gaps up for no real reason other than the market was up about 0.4% or something at the open. So I think I use gap ups as a bit of a gift. So I had 1,800 shares. No magic to that. That basically that's the number of shares I could take. My stop was down here. I bought it at 20.98. My stop was at 20.48, 20.58 rather. So 40-cent risk. Under the yellow conditions right now, my maximum loss would be $700, and so that allowed me to buy 1,800 shares. So on the open, when it gaps up, I sold 300 of those shares immediately on the open at basically I got 21.40. Just get some money off the table, because oftentimes on a gap up for no good reason will sell off and drift right back down again. And so I didn't want that. I wanted to take something off the table. Then it held there actually. So we went off on our walk, and I put a stop loss right under the low of the day for another 500 shares. And then my stop loss on the remaining shares at break even. So again, I've got a no risk trade. Why would I put a stop under the low of the day? Same basically reason that you get a gap up. If it undercuts the low of the day, odds are really good it's going to drift right back down to here. And I just wanted to protect some profit, especially in this kind of an environment. So we head off on our walk. I got stopped out to the tick. I think I had to stop at 21.30. It got down as low as 21.29. But anyway, it was still a nice little gain. And now my stop on the rest is break even. And so I'm guaranteed a 1 hour profit on this trade. So that's just the way I approach it. Probably a more safe way of doing it is, since I've already taken off one risk unit here, 1 hour, I could allow this to come all the way back down to my original stop area, and at worst this would be a break-even trade. I'm just a little more chicken in this environment, and if I get a 1 hour, which in this case was $700, I'll just take it. But if it continues to go up, then I'll adjust my strategy. So I don't know how much that helps. I'm going to look at one more. It was a day trade, but it shows the same. Take off these moving averages. Same concepts of my selling rules. So here's a 30-minute chart. Actually, we're going to go. This is before the day starts. This is a 30-minute chart of symbol is TNA. This is the small cap index IWM, but it's triple leveraged. So this is like one of my sort of favorite day trade instruments. Every time the small cap index IWM goes up 1%, this will go up 3%. So it's a two-edged sword. Of course, it can go down the same amount, but that's why I have really, really super tight stops on this. So I look at a 30-minute chart of this. Actually, we should just go to the daily. Let's just go to the daily to start off there. So as similar to the RSP, this had a nice move up off the bottom here, and then 4 straight days down, and we're due for a bounce. That was so going into the day. My notes, what I expected out of Friday's action was to test the low from Thursday, but have an up day, but closing within the range from the previous day. That was sort of my expectation going into the day. So sure enough, that's exactly what's happened. So we'll go back down then to I'm going to go to a take this off here. Go to a 3-minute chart. And bear with me while I get this thing organized. So I'm looking at this right from the get-go as potential day trade. So the first thing I do is, this is today. Spread this out. A little complicated with this. And let's go to yesterday. When I say yesterday, this would be Thursday. So Thursday, we opened here. So I'm going to put in a volume weighted moving average from the opening price on Thursday. So this tells me what the average volume weighted moving average is for since this day. So every time we're under here, everybody that is bought is pretty much underwater. And when it gets, so that's enough said about that for the second. So now we're going into this morning. And we're here. So this is what we're like. And we have yesterday's low is right here. So I draw a line under yesterday's low. And what I'm expecting is a test of that. And if it goes all the way through it, then all bets are off. So just roll the video forward, bar by bar. And as you can see, it gapped up and then immediately sold off. Okay, so I'm keeping an eye on it. Keeping an eye on it. And it looks like, okay, I missed this. This looks like it's going to go higher. And where is it likely to stall? It's going to stall probably around this volume weighted moving average from yesterday. So I'm watching it, but now I haven't really lost interest in it, but it's not doing what I wanted it to do. But then a little while later, again, this is, I say, a 3-minute chart. So we're now half an hour into the day. And I'm still keeping an eye on it. I'm doing other things, obviously. And now it's coming back down to the low. So now it's getting much more of my attention. And see what happens when it hits the low. Actually, if I recall right, yes, I do actually. I bought it. I thought, okay, it came down here. Spread this out. It came down here and then recovered most of that bar in the same 3-minute bar. Next one was a small inside bar. So I bought it coming out of here. I think 23.76 is where I bought it, yes. And I had like a 15-cent stop. So I put a stop down here at just under 23.61. Ran up 23.86 or something like that. So I started raising my stop to break even on half and then half at my original stop. So again, it's all about protection, and we're in a solid downtrend here. So we're going against the grain. Sure enough, this one stopped out. So I ended up losing like a tiny amount. What was it? It was like 25 bucks. When I was risking about 100 and something, a little over 100. But anyway, keep it on the radar. Now here was interesting. It goes below yesterday's low. Okay, now it's decision time. What's going to happen? Well, again, we get a bar that goes down and then immediately reverses. So here, this is really uber aggressive and not recommended for everybody. But I bought this at 23.45, which was just like 3 cents off the low of today. Normally, I would have taken a huge, 3 or 4,000 shares, risking $200 or so. But I took less than that. Just I didn't have a lot of confidence, and had a 6-cent stop, and then we started to go back up, and then down, getting a little over. Okay, I'm going to get stopped out. No, we recovered, and now we're off to the races. So what I failed to do here was actually would have drawn another volume weighted moving average on the opening bar for the day. So this now becomes my target, my short-term target. So I took a third of my position off right here at 23.73, which, so that was 26 cents on a 6-cent risk. So I'm 4 to 1. So that's a logical reward for me as well. So took a third off. Oops. And then comes down, and then right around this time, where are we now? At about 8:15, we go for our walk. So what am I going to do? So what I did is there's this tiny little pivot here. So if it goes below 23.67, I'm going to sell another third. So this is the first one I'm selling on strength. The second one I'm basically selling on weakness. It's now starting to, it would be pulling back. And then the last third I have a break-even stop, so I don't really care what happens. So I can go off on my walk and not have to worry about it. And sure enough, somewhere along the way, yeah, right about here, I guess it was, I got a beep, an alert on my phone that I was stopped out on my second third of it. Okay, nothing I can do about that. Yeah, right on this bar right here. So we're still walking. Can't do anything. And this is moving up nicely. And I get back right around here. Yeah, it's 10 o'clock. It's probably another couple of, yeah, right around here I get back and I see, ooh, we're nice. We're up now in the second spot where I would have probably sold this, another, the last of it at this target right here. But I guess for some reason I didn't. I must have been still out on our walk, because I come back, here we go. And on this bar here, I see this, and I put a trailing stop in. So again, I'm selling on strength, but I'm putting a really tight trailing stop of 10 cents on it. So my stop is at, it just trails this. So at 24.29, if it goes to 24.19, I'm out. And of course it didn't. So now my stop gets raised automatically by the software. And I think right about here somewhere, I get stopped out at 24.37 is my, so I'm now completely out of this trade. And then I do nothing for the rest of the day because we're almost done. And sure enough, it didn't do much. So what's the lesson here is having some predetermined areas where you know the stock is going to have some problems getting through, and setting your target, but maybe not selling at all. Just gradually taking a piece off and then raising your stop. So at least if you get a nice big gain, you're getting it on some of it. A lot of us would say, well, geez, I wish if you'd held the whole thing, you'd had a much bigger gain. True, but to me, it just doesn't fit my style. I just feel more comfortable taking some off along the way. So this concept applies whether you're looking at a 30-minute chart, a daily chart, a weekly chart. There are areas in the chart where it seems obvious that it should be a target. So backing up to a 30-minute chart, my entry was down here. you can see there's a bunch of this whole area in here is going to prove hard to get through. So having an expectation of holding the whole thing for a run back up here is just going to cause you grief. So my way of thinking is if it gets up into this area, I'm certainly going to take some off because you can always buy it back again. If it gets up in here and the trail, so it might give you another entry and you can get in and add it back again. Okay, so enough said for that. I think that was probably too confusing for everybody, but I apologize for that. But maybe it was useful for a couple of you that are more active traders. Have a good weekend. I'm looking forward to scanning and seeing what kind of opportunities, because if we go green next week, I'm going to be loading the boat. Cheers.